Gold speculation reaches a record low. Could this be the perfect time to start acquiring gold assets? Amir Adnani, top resource entrepreneur and recipient of Casey's 10-Bagger Club, thinks so. In an environment where nearly 70% of TSX venture mining companies have a market cap of less than $5 million, Amir's new gold company, Brazil Resources, just raised $6.4 million through an oversubscribed private placement, with the biggest buyers being management, Doug Casey of Casey Capital Strategies, and legendary investor Rick Rule. BRI also just completed the acquisition of Brazilian Gold Corp, which will more than double their in-ground gold minerals. Brazil Resources seizing the opportunity. Greetings and thank you for joining us at FutureMoneyTrends.com. I'm here at the Cambridge International Investment Conference in Palm Springs, California. It's a special interview for the PDAC show, which is the largest mining conference actually in the world. David, thank you so much for joining us.
My pleasure, thank you.
David, with the Morgan Report, you've been. How long have you been writing the Morgan Report?
Oh, I think we're in our 16th year. I actually started doing some consulting back in the late 90s. About precious metals. It was on a different domain name than silver-investor.com. And so I actually had very few people at the time. Basically, it's a consulting business.
Yeah.
And then that developed into the URL silver-investor.com. And then I changed that, kept the website, but changed the domain name for the report to themorganreport.com. And I've been on that, like I said, about 16 years. But it takes in the early few years that it was basically handwritten notes to a very few let's say, leaders, thought leaders about why precious metals might be important. Okay, so coming to this conference today, it's a new climate. You know, for 10 years, precious metal investors, they loved gold and silver. It was bringing a lot of new people in. What was your speech about today as far as the outlook for 2014? Yeah, that was the name of it, Precious Metals Outlook 2014. And I actually had a lot of fun with it. There was an article written by Bloomberg that basically disses gold in quite a interesting way. And they talked about certain aspects of why gold is not a great investment. So I went through slide by slide, but I think really just for the PDAC want to make a few points. One is the bull market isn't over. That was the first slide that I presented, and that shows that in a major uptrend, gold could go down to $1,000 an ounce and still remain in a major uptrend. So that's technical analysis 101, the basic adherent to what is a bull market. As long as it maintains above that line, we are in a bull market. Therefore, by fact, by looking, we are still in a bull market.
Yeah.
Point number two, if it's over, then it has to breach that line, and you have to get sentiment even worse than we are. Sentiment's starting to pick up. The people that are coming back into the market, the underlying equities, in fact, some of the speculative stocks that we have in the Morgan Report up 100%, believe it or not.
Yeah.
We had some that were at $1 now at $2, and the market really isn't that strong right now, as we both know. So the market isn't over is point number one. Number two is the main thrust of my speech was that gold and silver, physical coins, are a asset known as money that's held outside of the system. And this is something that is common sense that it is. Very few people get it because they're so used or ingrained into thinking of a financial asset, a piece of paper or electronic brokerage account, or a bank account, or a life insurance policy, or something that has counterparty risk as being a financial asset. Not that those aren't, but a monetary asset is something that's physical money outside of the system, and that's physical gold and silver. There's a study done by Ibbotson and Associates that said that absolutely required to have physical metal of around 10 to 15% for all market conditions. So that, if you study that report, and I'm going to be doing a series on that for an educational network here over the next few months, that proves that regardless of good, bad worlds, take your pick, go scale from 0 to 100. Put your meter wherever you think we are economically. Doesn't matter where you put that scale, you should have precious metals in it. So that's point number two. And the last point I like to make is no bull market ever ends in the manner that it has, quote unquote, ended by Wall Street's edict. In other words, they said, okay, well, silver peaked, da-da-da. No. Markets go into a panic buy at the top. Look at any bubble in history and look at the tech wreck. Look at the housing bubble. Look at the tulip bulb mania, for crying out loud. Or the Mississippi bubble, or any of those. It's a panic buy situation. We did not have that in gold and silver yet, but I believe it will. So for those three reasons, I think the bull market is still intact.
Okay, so technically we could go to 1,000. That seems like, for gold investors, that seems like that would be a religious experience. That would be pretty scary.
Yep.
Do you see that actually happening?
No.
Okay.
No, in the speech I said, I'm on record saying that silver's bottom is in, and so far I'm right. Doesn't mean I'm right forever, because tomorrow's tomorrow. But the 1817 print that took place on the 28th of June 2013 is the low print so far for this correction, manipulation, whatever you want to call it, for this downtrend. Since that date, 28 June 2013 till now, silver has traded above that level. So as long as that takes place, I am correct. And so far I am correct.
Yeah.
7 months of base building. Usually silver, I mean, there's no, I believe somewhat in cycle theory, but no one knows to the exact day anything. But we've built enough of a strong base now that once we break the $21 level to the upside and we maintain it with good volume and say 3-4 days in a row, we're probably on our way to start up to the 26 level and be tested.
Yeah.
Gold is probably put a bottom in as well, although in gold, to me, technically, it doesn't look like it's for certain. Not that I'm right about silver, so far I am. Gold could get to another test of maybe the 1180 level, or maybe below that, maybe 1150. I don't see it going to 1,000. I think the bottom of gold's in. I'm more certain the bottom of silver's in, but regardless, I don't see gold going to that level.
Yeah.
Too many banks have said that it is. So if you do the opposite of what the banks say, you're usually doing a smart move.
David, I've been buying the metals since 2005. It's hard to believe it's been 9 years, but for that whole time, I would look at gold and it would be up, whatever, and then silver would be up with it, or they'd go down together. Well, in January, I was looking at gold, and it was weird. Silver wasn't doing anything. It was down, not doing anything, and gold is having a $50 day or a $30 day. What are your thoughts of the last month, how silver's been acting?
Well, it's been lagging. I think that there's more interest in gold right now. I mean, nation states buy gold. No one buys silver for a monetary asset or protection. I mean, people do, but no nation state, no banks buy silver as a core holding, whereas banks do. In fact, I showed on one of my slides in the presentation that banks have been net buyers after the 2008 financial crisis. I said, watch what they do, not what they say.
Yeah.
They're saying gold's going to 1,000, but they're buying more gold. And they have been for like 4 years, so 4 or 5. So that's the point. So I think that it's one of those, I wouldn't say quirky parts of the market. Gold's got more interest now. There's more buyers in gold than silver. But the amount of money in the coin market, there's a lot of money going into silver relative to gold in like the U.S. Eagle program.
Yeah.
So there's still some, oomph to the market in silver. But that doesn't worry me. I just think there's more emphasis in gold. A lot of it, I think, part of it, I should say, not a lot of it, but part of it has to do with this very small amount of gold that's in the COMEX and the amount of withdrawals that have been taking place on the COMEX.
Yeah.
And I think a lot of gold, followers that are advocates of gold know that, and I think they're waiting. And I think someone or something or someone's might be out there testing the market a little bit, which I'm all for that, to see exactly what's going on in the gold market. I mean, I keep harping on it, and like a broken record, but this Germany thing, something's wrong with the gold market.
Yeah.
And so I think there's just a lot more interest in it.
Being here at this conference, they specialize in, profiling the junior mining companies. At this point, with the sector being so decimated from last year, I know they're really up off their lows now, but if someone wants to speculate in the mining sector, would they be better off just buying like a First Majestic? Because it's like why even buy one that's speculative when you can buy the good ones that are just beat to hell?
Yeah. Well, the way I've always done the Morgan Report has been very consistent, because I was young in my 20s and bought too many story stocks, venture exchange stocks, and most of them turned out to be nothing more than a story.
Yeah.
So when I started the Morgan Report, I didn't want that to happen to anybody that followed my work. And so I put serious money into serious companies and mid-level money into mid-level companies. And when I speculate, it's money I afford to lose. And I've only broken that rule once in this cycle. So I think that's exactly right. You should put big money into it. And let's take an example. You can buy a major royalty company, write options on it, and use that money to speculate with. Mm-hmm. I mean, if you are, a good-sized portfolio, and I say good size, like $10,000 or something. I mean, if you're going to invest $1,000, I mean, you should be in coins only. You shouldn't be in the mining stocks.
Yeah.
But The speculation thing, and I'm going to use this intro. There's one I'm looking at that isn't here at the show that could be a game changer, but it is a speculation. It's one that I probably will buy and money I can afford to lose, but it has a very good recovery rate, greater than anything in the industry so far. It's an on-site situation where you can actually take this to a site on wheels, so to speak, do the processing and wheel it off to another site. And more importantly, it's totally environmentally friendly.
Will you be profiling this to your members?
I will, but I'm still doing my due diligence on it. So
Okay.
it's something that, a Morgan Report subscriber probably would be in the first group to know about it. There's others involved that some are at the show. I don't want to give away too much. I'd like to sell more reports.
Yeah.
But, by the way, you can get the Morgan Report for free. Just go to themorganreport.com/free, and you can get it for 30 days for free. So that would be...
And that's the actual paid area you're getting for
the
free
paid
for 30
membership.
days.
Yeah, that's right.
Oh, that's great.
So, when I write this one up, if I choose to write it up, and I think I will, it'd be one, but again, it's a speculation. But it's a very interesting concept. All the stuff is off the shelf that he's put together in a unique way to go on site, extract tailings as an example, get a huge recovery rate, and leave it without having any water issues or that kind of thing. So there's a big market for it.
Yeah.
We just have to wait and see.
That's great.
It's cool. Yeah.
David Morgan with the Morgan Report. If you want to visit his site, you can check out Morgan Report or go to silver-investor.com. And you have a free list, free membership as well as the paid membership. So you can certainly go there, and you can also buy silver at silver123.net.
.net.
All right. Thanks so much, David.
Thank you.